U.S. stock indices reached new record highs despite the release of revised jobs data from the U.S. Labor Department, which indicated that 911,000 fewer jobs were created over the past year than initially reported. This revision suggests a prolonged slowdown in the job market, heightening expectations for potential interest rate cuts by the Federal Reserve. The central bank has been considering such measures following disappointing employment figures for July and August. Investors are now closely monitoring upcoming consumer inflation data, as a higher-than-expected reading could deter the Fed from further easing monetary policy. In Europe, political instability in France led to a temporary increase in borrowing costs after Prime Minister François Bayrou resigned following a failed confidence vote related to proposed budget cuts. Despite this upheaval, the market impact was limited, with analysts downplaying the risk of a financial crisis. In the corporate sector, Anglo-American and Teck Resources announced a significant merger aimed at creating a major player in the copper and critical minerals market. This news boosted their stock prices, with Anglo-American shares rising 9% in London and Teck Resources climbing 11.3% on the New York Stock Exchange. Meanwhile, geopolitical tensions in the Middle East contributed to a rise in oil prices, while gold prices soared to an all-time high as investors sought safe haven assets amidst global uncertainties.
Quanex Building Products Corporation, NYSE, NX, is currently under investigation by the Portnoy law firm for potential securities fraud. The investigation is centered on whether Quanex and its board of directors failed to uphold their fiduciary duties to shareholders by not securing the best possible terms for shareholders in a proposed merger, and by potentially withholding crucial information necessary for investors to evaluate the merger's value accurately. Investors who have incurred losses are urged to contact the law firm to explore their legal options and possibly participate in a class action lawsuit. This development could significantly impact Quanex's stock performance and investor sentiment. Allegations of securities fraud typically lead to increased volatility in stock prices as market participants reassess the company's governance and transparency practices. If the investigation finds evidence of wrongdoing, it could result in financial penalties and a loss of investor confidence, potentially affecting Quanex's market position and future strategic decisions. Investors should closely monitor the situation as it unfolds to understand the potential repercussions on their holdings and the broader market implications.
Cotality's latest Home Price Insights report reveals a continued deceleration in U.S. home price growth, with prices rising just 1.4% year-over-year in July, significantly trailing the 2.7% inflation rate. This trend, coupled with recent economic indicators such as a weak August jobs report and revised job creation figures, suggests potential changes in monetary policy. The Federal Reserve is anticipated to cut the federal funds rate at its forthcoming meeting, which could further influence mortgage rates and housing affordability. The report highlights regional disparities, noting that while many markets, especially in the Midwest like Chicago and Indianapolis, remain stable or show growth, areas in Florida and the West are experiencing price declines. Month over month, home prices dipped 0.2% from June, an atypical trend for July, indicating persistent weakness in home buying demand. Cotality projects a 3.9% rise in median home prices by July 2026, driven by lower mortgage rates, which are at their lowest since last September. This could spur demand, counteracting recent price weaknesses and potentially shifting the market towards a more favorable environment for buyers.
Cathie Wood's bullish stance on Coinbase Nasdaq Coin has been vindicated as the cryptocurrency exchange has emerged as a standout performer in the volatile digital asset market. Wood, CEO and CIO of ARK Invest, highlighted Coinbase's regulatory compliance and strategic positioning as key factors in its success. Following the collapse of competitors like FTX and challenges faced by Binance, Coinbase has capitalized on the opportunity to expand its market share. The recent introduction of spot Bitcoin ETFs has also contributed to market volatility, benefiting trading platforms like Coinbase. As of the end of the June quarter, ARK Invest holds 2.6 million shares of Coinbase, making it the firm's second largest position. Coinbase has seen its stock rise approximately 93% over the past year, bolstered bolstered by strategic investments in innovation and infrastructure. Patient Capital Management, in its Q4 2024 investor letter, noted Coinbase's role in shaping the crypto ecosystem, citing advances in wallet technology and USD Coin as potential catalysts for broader adoption. Despite the risks associated with cryptocurrency investments, analysts remain optimistic about Coinbase's future prospects due to its expanding moat and commitment to innovation. However, some investors continue to explore opportunities in AI stocks, which are perceived to offer higher returns in a shorter timeframe.
Bregar Eagle and Squire, PC, a law firm specializing in shareholder rights, has launched an investigation into Methode Electronics Inc. May, following a class action complaint. The investigation focuses on whether the board of directors breached their fiduciary duties, particularly concerning the company's transition from a high-volume, low-mix production model to a high-mix, low-volume approach at its Monterrey facility. The complaint highlights significant operational challenges, including loss of skilled employees, production planning deficiencies, and logistical issues that have hindered Methode's strategic shift toward diversified and specialized products, especially in the electric vehicle (EV) sector. These operational setbacks have reportedly delayed Methode Electronics' new EV program launches, impacting the company's revenue streams and casting doubt on its ability to meet previously stated financial targets, such as the 2023 earnings per share guidance and the projected 6% organic sales growth over 3 years. The investigation by Bregar Eagle and Squire aims to determine if these issues were adequately disclosed to investors and whether the company's management has acted in the best interests of its shareholders. This development could potentially influence investor sentiment and affect May's stock performance, as stakeholders assess the implications of these alleged governance and operational deficiencies.
Qualcomm Incorporated, Nasdaq QCOM, has recently garnered attention as a potential leading AI chip stock, following positive analyst commentary and a notable stock price rise. Bernstein's senior U.S. semiconductor analyst Stacy Rasgon expressed optimism about Qualcomm's prospects, particularly highlighting the company's potential growth in the Android market driven by advancements in AI technology. Despite a stagnant smartphone unit market, Rasgon suggests that Qualcomm could achieve high single to low double-digit growth due to increasing content in new AI-enabled phones. Since these comments, QCOM shares have appreciated by 8%, reflecting a positive market response. Despite this growth, some analysts and investors remain cautious, noting that while Qualcomm's technology licensing business is robust, it faces legal challenges from major customers. The Mares and Power Balanced Fund acknowledged Qualcomm's strong cash flows and technological capabilities, yet described its outperformance as somewhat hollow due to underappreciation in the market. While Qualcomm remains a compelling investment in the wireless technology sector, the report also hints at other AI stocks with potentially higher returns, suggesting investors explore broader opportunities within the AI landscape.
German companies at the IFA Consumer Tech Show in Berlin are expressing concerns over U.S. tariffs, particularly a 50% levy on steel and aluminum, which is complicating production for firms like Rammelsbacher. These tariffs are part of a broader trade strategy by the U.S. aimed at reviving domestic manufacturing. The ZVEI Industry Federation warns that German electronics exports to the U.S., the sector's second-largest market, could decline by up to 20%. This comes amidst already challenging conditions for German manufacturers, including rising labor costs and high energy prices. The impact of these tariffs is reflected in the recent drop in German exports to the U.S., reaching their lowest level in nearly 4 years as of July. Large companies like Miele have responded by raising prices and shifting some production to the U.S. to mitigate tariff impacts. Meanwhile, Chinese companies at the IFA are gaining attention with innovative products, underscoring the competitive pressure on German firms. The economic outlook for Germany remains uncertain, with hopes that domestic consumer spending might revive during the holiday season.
Gold prices in India have reached an unprecedented 1.10 lakh rupees per 10 grams, reflecting a significant surge aligned with global market trends. This increase is driven by a combination of economic uncertainty, a weakening U.S. dollar, and heightened demand for safe haven assets. Internationally, gold prices are near record highs at $3,475 per ounce, with silver also experiencing substantial gains, trading at $40 per ounce. The year-on-year increase of 35 to 45% for both metals has outpaced most other asset classes, as reported by Axis Mutual Fund. The rally in precious metals is largely attributed to a declining dollar index, which has dropped to 97.7 from 110 in February, and expectations of Federal Reserve rate cuts fueled by softer U.S. economic data. The latest U.S. non-farm payrolls report showed a weaker-than-expected addition of 73,000 jobs, reinforcing the likelihood of monetary easing. This environment has prompted increased gold demand, with exchange-traded funds, ETFs, adding 400 tons in the first half of 2025, and central banks purchasing 166 tons to diversify away from the U.S. dollar. However, jewelry demand in India and China has declined as consumers defer purchases due to high prices, although the introduction of 9-karat gold hallmarking aims to improve affordability. Silver's rise is supported by both safe haven buying and growing industrial demand, with ETF inflows reaching a record 95 million ounces.
Cathie Wood, CEO of ARK Invest, has reiterated her bullish stance on Tesla Inc., Nasdaq TSLA, maintaining a $2,600 price target by 2030, significantly higher than its current trading price of $350. Wood's optimism is fueled by Tesla's advancements in robo-taxis and humanoid robots, which she believes will drive substantial revenue growth. She highlights Tesla's leadership in AI and robotics as key differentiators, projecting a $26 trillion market opportunity over the next decade. This ambitious forecast is based on Tesla's innovation across 3 platforms: robotics, energy storage, and AI, positioning the company to capitalize on emerging technological trends. Despite recent challenges including declining analyst expectations for auto delivery volumes and regulatory hurdles, the Barron-focused growth fund remains confident in Tesla's long-term growth prospects. The fund cites the company's strong product lineup, cost efficiency, and technological edge as factors supporting future demand, particularly with the refresh of the Model Y and new mass-market models, while some investors are cautious, favoring other AI stocks with potentially higher short-term returns. Tesla's strategic focus on AI and robotics continues to shape its growth narrative, underscoring its potential to transform the transportation and technology sectors.
Berger, Eagle and Squire, PC, a prominent shareholder rights law firm, has initiated an investigation into Atcore Inc., NYSE, Atker, on behalf of long-term stockholders. This inquiry follows a class action lawsuit filed against Atcore, which alleges that the company engaged in anti-competitive practices, specifically a price-fixing scheme related to PVC pipes, leading to artificially inflated prices and unsustainable financial gains. The class action covers the period from August 2, 2022 to February 3, 2025, and claims that Atcore's board of directors may have breached their fiduciary duties by failing to disclose material adverse facts about the company's operations and prospects. The exposure of the alleged price-fixing scheme has reportedly led to a significant decrease in PVC pipe prices, adversely affecting Atcore's business operations. The investigation seeks to determine whether Atcore's management made materially false or misleading statements, potentially impacting investor confidence and stock performance. This legal scrutiny could have significant implications for Atcore's financial health and market position, as well as for its investors, who are encouraged to contact the law firm to explore their legal rights and options.